Welcome to Just Some Guy Trading with 2021 World Champion Trader Kevin McCormick. Welcome to Just Some Guy Trading. I'm Kevin McCormick, and I'm doing a special report on the upcoming boom I see coming in natural gas prices and how we can profit from it. This is a change from my usual videos for everyone out there that's one of my subscribers, because I'm usually hitting on the futures market and commodities, but I see a rare opportunity right now where the best opportunity is outside of us trading the direct commodity when it comes to natural gas. As a reminder, this presentation is for educational purposes only. So why do I think we have a boom coming in natural gas prices? To put it simply, it's already in the cards in the futures market. What I'm showing you here is the futures contracts, the one that we're currently in right now, all the way to January 2024. There's a big difference between the pricing of natural gas and crude oil right now. Crude oil is in a premium market. This is unusual, but it's been happening often, where the front month contract is selling for more than the back month contract. So as you can see here, we're at 83.48. But January is trading at 81.31. Where we have a very large disconnect right now is in the natural gas market. Currently, natural gas is trading at $2.77, but in January, less than 6 months away, we're now trading at over $4 in natural gas. This is a huge opportunity for companies that are producing natural gas to sell their natural gas products at prices that are significantly higher than they have been able to sell for the last 6 months. And this is where the opportunity lies, and why I'm saying that the commodity itself may not be the best opportunity, and this is coming from a commodity trader here, because if you look, this is going to develop over the next 5 months, this increase in price. I'm not selling natural gas myself, but companies in the U.S. that are going to be able to lock in these prices and make a lot of money in the coming 6 months. So how can we profit from this? First off, let's hit on how we don't want to trade this. And what you want to avoid is the commodity ETFs. A lot of my followers know I'm not a big fan of these products. But these products are designed for you to invest in short-term moves in the price of natural gas. They do this through the futures contracts I just showed you. So as you can see, they have to buy new contracts as each contract expires. So if you buy one of these ETFs, you're missing out on that future price that we just saw in January of over $4 on natural gas. Because when that other front month contract expires, these ETFs will sell that contract and buy the next one at the higher price. And if you're a long-term holder of these ETFs, you're not going to capture the full profit potential in the natural gas pricing that we're discussing today. So how should we do this? We want to look for energy companies and buy their stocks right now. What do we want to look for? We want to look for companies that have a large natural gas exposure versus oil. Is it possible oil is going to go up in the future? It is. But as we just saw in the futures market pricing, natural gas is locked in at a 30% plus premium just 5 months from now. We want to take advantage of that and find that disconnect in the market, knowing that these companies are going to sell their natural gas at a much higher price in the near future. But not all companies are created equal in this. Some companies have already aggressively hedged their prices and have pricing locked in, and they won't be able to capture these high prices. So we want to find companies that have small hedge positions in place for 2024, and the extra kicker is a low cost of production, because this $1 increase that we're going to see could be pure profits for companies that have a low cost of production. How do we find this out? Go look at the recent earnings presentations. The good news is most of these earnings presentations have come out in the last couple weeks, so it's got great new data points for us to look into and find the right opportunity. And the last question we all should be asking ourselves is, these energy stocks have already had a big move over the last 3 months. Isn't it too late for us to jump in? Well, I've already had my position in place, but I am increasing my position because if you can find the right company, as I said, the analyst profit projections are still too low for the quarters ending in probably Q4 and especially in Q1 of next year, when these companies that are big producers of natural gas can capture that higher price that we just saw. So how do we find out this information? I want to give you a quick look at 3 examples from the investor presentations and quarterly earnings from 3 of the large natural gas producers here in the US. This is not a complete analysis of everyone out here, but I want to teach you how to look at these companies so you can make this decision on your own by looking at these reports and then pick the stock that best fits your time frame and your portfolio for your investment style. So we're going to hit on EQT Corp, Pioneer Natural Resources, and Coterra. And as I mentioned before, this is just a snapshot of part of their earnings and investor presentations. But this is one of the things I want to highlight that you want to look at. And I'm going to give you 3 distinct different examples as we go through here. But the beautiful thing is, and my followers know when I talk about the commitments of trader reports and things like that, is all these companies actually tell us what their hedge positions are, where they are in the market. They all tell us information a little bit differently, but this example from EQT is an excellent example. You can see what they did in Q3 actual, where they are in Q4, and that important Q1 area that we just discussed where we're looking at $4 for natural gas. And here you can see where they have their longs, their short swaps, call positions where they've owned the call, and here EQT calls out what they own. This isn't a huge hedge position right now because you can see it's just 13. This isn't 13 contracts. This is the volume of what they're producing. But as we just discussed, they're hedged at a call at $3.20, and today that natural gas in January is trading at $4. So there's a lot of upside from this current position. But then you can see here as well, EQT did a great job of selling call premium probably last year sometime. And then they sold a lot of calls at $6.21. And I don't blame them for that because if I was producing natural gas, I'd love to be able to sell it at $6.21 right now, considering just 3-4 months ago, we were in the low $2 range. And then you can see here as well, they have a nice put position in place as well at $4.31. So that's above the current price that natural gas is trading. So this is an interesting hedge book from EQT that's showing their hedge positions. I recommend you go and take a look at all the information from their investor presentation before you make a decision. That is my opinion for all these stocks, and there's other companies out there that aren't in this presentation. Second, I really liked this chart from Pioneer Natural Resources because it really highlights to you what's happened over the last 12, 18 months and where we could be in the future. Because here in Q2 of 2022, when we had the big push up in oil prices that we all remember very well, they actually called out what the futures contract, so NYMEX is that futures pricing I showed you before, what the average monthly price was, and what they actually got for their oil. It is very normal for a producer to actually be selling their product for below the commodity trading desk's price because they sell directly to people who need it, and they do hedging in a lot of different ways out there. But this gives us a shot of what it could be in the future because just, a year ago, oil was at this price. Q4 and Q1 are probably good examples of back to where we're going to go right now because oil is trading at $82 now. Q1, it was at 75 is what they realized. And that's where, if you wanted to go back and take a look, you could see profits coming in the future. But more importantly, over here on the natural gas side, you can see here as well, Q4 and Q3, or Q1 of 2023, are probably good examples of where Pioneer Resources profits could be at again in the future. So we're always looking at, when it comes to stock investing, earnings growth. So knowing what the price of natural gas and oil is looking like in January of next year currently, it's not a big leap of faith to say that Pioneer is going to show a profit increase in Q1 of next year. So might be an opportunity for us to take. But like I said before, take a look at the blend of the company's profits and which side you want to invest more heavily in. If you want to catch this big rise in the natural gas pricing, we probably want to hit on somebody who doesn't have as much oil exposure. And the last example I want to give you from these current earnings reports and presentations is Coterra. And I'm going to hit on it once again, guys. There are a ton of slides with more in-depth information out there on the websites for these companies. Go take a look so you can make an educated decision on what you want to invest in. But the reason why I like this one and want to highlight it is because I hadn't seen this from any other companies, but this is hitting on what I said before. It's normal for them to sell their product for below the current market price. And Coterra calls out the fact that they have contracts that are a lower price that are rolling off, and they expect to be able to capture more of the price increases into the future. That's something I like as an investor. When I see a much higher price 5 months from now, I want to know I have a company that can capture that upside and is not locked into lower prices like they were back here in 2021. And you can see over here, Coterra has done a great job on the crude oil price of capturing almost the full value that the market is trading at. So these are the kind of things I'm looking at to make my decision on how to capture the already, as we can see it in the futures market, price increase in natural gas that is coming over the next 5 months. So with that said, just a quick recap. I want everyone out there to take a close look at these energy companies. I think they're great opportunities to be purchasing on a pullback or adding to your current positions now. I personally am looking for companies that have larger exposure to natural gas so I can capture those higher prices that the market is currently trading at in January. But with that said, if you're a first-time listener of my channel, I invite you to check out my weekly update where we talk about the stock market and the commodity markets at times. And also, don't forget to like and subscribe to my channel so you can always find out when I'm producing special reports like this one on the natural gas market. Thank you and good luck.